something significant is unfolding behind the scenes in the Bitcoin market, a silent tremor that only the most observant analysts have caught. While the public watches the daily price swings, long dormant wallets controlling billions of dollars have started moving vast sums of Bitcoin. This isn't random, it's a coordinated signal that suggests a major market shift is imminent. If you're waiting for the mainstream news to confirm it, you might already be too late. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The cryptocurrency market has been navigating a period of intense uncertainty in early 2026. After a turbulent 2025 that saw Bitcoin reach a peak near $126,000 before a significant correction, investor sentiment has been decidedly mixed. As of early February, Bitcoin has been struggling to maintain its footing, recently dipping below the critical $80,000 support level for the first time since April of the previous year. According to reports, this price action has triggered a cascade of liquidations, with over $2 billion in both long and short positions being wiped out, creating a climate of fear and apprehension. The broader financial landscape is also in flux. Analysts have noted a potential decoupling between Bitcoin and traditional safe haven assets like gold. While gold has experienced its own pullback, some experts suggest this could ignite a capital rotation into Bitcoin as investors search for a reliable hedge against currency debasement. However, the immediate sentiment remains bearish. Reports on February 2, 2026 indicated that all top 10 cryptocurrencies by market capitalization saw their prices drop, with Bitcoin falling by over 2% to trade around $76,472. This nervous atmosphere provides a critical backdrop to the massive and largely unnoticed movements happening on the blockchain itself. While surface-level indicators paint a picture of a market in distress, the on-chain data reveals a story of strategic, large-scale repositioning by some of Bitcoin's earliest and wealthiest holders. The primary development that has set the on-chain world abuzz is the awakening of a significant number of long-dormant Bitcoin wallets. Throughout January 2026, wallets that had been inactive since the 2010 to 2017 era collectively shifted approximately 4,905.98 Bitcoin. This substantial movement is valued at roughly $383 million at current exchange rates, marking a significant event after years of silence from these early adopters. Further analysis of this activity reveals a fascinating detail. A substantial 40.77% of these moved coins originated from Bitcoin block rewards mined in 2010. These are truly ancient Bitcoins, having remained untouched for well over 15 years, making their recent activation particularly noteworthy. The sheer volume and age of these moved assets suggest a calculated, strategic decision rather than random activity. While the month of January saw several wallets stir, a single 2010-era whale made headlines by offloading 2,000 Bitcoin early in the month. This individual movement alone represents a significant portion of the total dormant coins that became active. Delving deeper into the on-chain metrics for January 2026, data provides a granular view of the dormant wallet activity. While the initial headline-grabbing movement involved a 2010-era whale, the overall picture for the month shows a more distributed, yet still significant pattern of activation across various vintage years. 40 wallets from the 2010 cohort showed activity, contributing to the total movement. Wallets from 2011, though fewer in number, recorded 4 spends, totaling 51.07 Bitcoin. The 2012 era wallets were more active, with 7 spends accounting for 147.19 Bitcoin moved. According to reports, the trend continued with 2013 era wallets, which saw 14 separate spends shuffling 547.15 Bitcoin. The 2014 cohort was not far behind, with 7 distinct wallets moving approximately 290.37 Bitcoin. In contrast, 2015 saw minimal activity, with only 1 spend nudging 20 Bitcoin. However, 2016 era wallets were considerably more active, posting the second largest Bitcoin total of any year this month, with 1,245.55 Bitcoin moved across 11 distinct transfers. Finally, 2017 era wallets concluded the period by shifting 604.623 Bitcoin over 24 unique transfers. This detailed breakdown underscores that while some large individual movements occurred, a broader, albeit selective, awakening of early era holders took place throughout January. Analysts are interpreting this surge in dormant Bitcoin activity with a blend of caution and intrigue. The movement of nearly 5,000 Bitcoin from wallets untouched for years, some for over 15 years, is not a typical market fluctuation. It signals a potential shift in the long-term holder's conviction or a strategic repositioning in anticipation of future market conditions. One perspective suggests that these early whales, having held through multiple market cycles, are now either taking profits or rebalancing their portfolios in response to the current market volatility and the recent price dip below $80,000. The fact that a significant portion of these coins are from 2010, representing some of the earliest mined Bitcoin, adds weight to the idea that these are highly informed decisions by seasoned market participants. Conversely, some analysts believe this could be a precursor to a bullish move. The strategic consolidation or distribution by whales often precedes significant price action. If these movements are indeed for reaccumulation at lower price points, it could indicate a belief in Bitcoin's long-term upward trajectory despite the current bearish sentiment. The ongoing macro narrative, where Bitcoin is increasingly viewed as a hedge against inflation and currency debasement, might also be influencing these long-term holders to adjust their positions. The key takeaway is that such large-scale, dormant wallet activity rarely occurs without a calculated reason, and its implications could ripple through the market in the coming weeks. Looking ahead to the next 1 to 4 weeks, the Bitcoin market is likely to remain highly sensitive to these whale movements and the broader economic climate. A bullish scenario could see Bitcoin finding strong support around the $75,000 level, potentially fueled by renewed institutional interest or a significant influx of capital from traditional markets seeking a hedge. If the dormant wallet movements are indeed a sign of reaccumulation, we could witness a gradual upward trend, with Bitcoin testing resistance levels around $85,000 to $90,000. The market might interpret the whale activity as a vote of confidence, leading to increased buying pressure. However, a bearish outlook suggests that the recent dormant wallet activity could be a precursor to further selling pressure. If these early holders are distributing their assets, it could exacerbate the current downward trend, potentially pushing Bitcoin towards the $70,000 mark or even lower, especially if the broader crypto market continues its recent decline. The critical factor will be whether the market can absorb this supply without significant price depreciation. The question for you, our viewers, is where do you see Bitcoin's price heading in the next month, and what's your target for its value? In conclusion, the recent awakening of long-dormant Bitcoin wallets, particularly those from the earliest days of its existence, presents a compelling narrative for the crypto market. While the immediate implications are still unfolding, the sheer scale of these movements underscores the dynamic and often opaque nature of on-chain whale activity. As Bitcoin navigates a period of price volatility and shifting market sentiment, these strategic shifts by early holders could prove to be a pivotal indicator for its near-term future. Stay informed, remain vigilant, and remember that in the world of cryptocurrency, the silent moves often speak the loudest. Don't forget to like this video, subscribe to our channel for more in-depth crypto news, and share your thoughts in the comments below.